Hello and welcome back to our channel, where we explore the strategies and insights of legendary investors. In today's video, we dive into Mark Cuban, a prominent investor, emphasizes key principles for successful investing. Investing in what you know, having a long-term focus, embracing contrarian thinking, prioritizing cash flow, and continuous learning. These principles form the foundation for making informed investment decisions and navigating the dynamic landscape of the financial markets. If you're new here, make sure to hit the subscribe button and turn on notifications so you never miss a video. We're all about providing valuable content to help you improve your financial literacy and achieve your goals. So don't forget to subscribe, and let's get started. Principle number 1. Invest in what you know. It means focusing your investments on industries, companies, or products that you have a deep understanding of or expertise in. It is about leveraging your knowledge and insights to make informed investment decisions. By investing in what you know, you can better evaluate the potential risks and opportunities associated with a particular investment. Warren Buffett also emphasized the importance of this approach, stating, "Invest within your circle of competence. Stick to what you understand." Investing in familiar territory allows you to stay ahead of the curve and spot emerging trends before others. It provides you with a competitive advantage as you can assess the viability and growth potential of a business more accurately. Warren Buffett echoed this sentiment, saying, "Never invest in a business you cannot understand." Now the question arises, how can you identify areas where you have significant knowledge and expertise? Reflect on your professional experience, hobbies, or personal interests. What industries or products do you interact with on a daily basis? Is there a specific field where you possess specialized knowledge or a unique perspective? By investing in what you know, you can align your financial decisions with your areas of expertise and passion. However, it is essential to conduct thorough due diligence and research even within familiar territory. Not all investments will be successful, so continuous learning and staying updated with market dynamics are crucial. Remember, as Peter Lynch once said, investing without research is like playing stud poker and never looking at the cards. Principle number 2. Long-term focus. It refers to adopting a patient and enduring approach towards your investment portfolio. It involves resisting the temptation of short-term gains and instead concentrating on the long-term growth and value of your investments. As Mark Cuban aptly stated, investing is not a sprint, it's a marathon. When you embrace a long-term focus, you shift your mindset from chasing quick profits to building sustainable wealth over time. It means recognizing that successful investments often require time to mature and generate substantial returns. As Warren Buffett advises, the stock market is designed to transfer money from the active to the patient. By maintaining a long-term perspective, you allow your investments to weather the ups and downs of the market, benefiting from compounding growth and capital appreciation. This approach also enables you to avoid making impulsive investment decisions based on short-term market fluctuations. The famous investor Philip Fisher emphasized the importance of patience, saying, "The stock market is filled with individuals who know the price of everything but the value of nothing." Now let's ask ourselves, how can we cultivate a long-term focus? It starts with setting clear investment goals aligned with your financial objectives. Define your time horizon and understand that wealth accumulation takes time. Resist the urge to constantly monitor your portfolio's daily performance and instead focus on the long-term trends and fundamentals of your investments. Additionally, regularly review and rebalance your portfolio to ensure it aligns with your long-term goals. This allows you to capitalize on new opportunities and adjust your investments as needed. Remember, successful investing requires discipline, patience, and the ability to tune out short-term market noise in favor of long-term value creation. Principle number 3. Contrarian thinking. It involves adopting a mindset that challenges conventional wisdom and goes against the prevailing market sentiment. It means being willing to take positions that differ from the crowd and seeking opportunities where others may overlook or underestimate them. As Warren Buffett puts it, "Be a contrarian. When everyone is panicking, be the calm one. When everyone is calm, be the one who panics." Contrarian investors believe that market inefficiencies and mispricing can occur when emotions and herd mentality drive investment decisions. They seek to capitalize on these opportunities by identifying undervalued assets or industries that have been overlooked or fallen out of favor. As Sir John Templeton wisely stated, "To buy when others are despondently selling, and to sell when others are avidly buying requires the greatest fortitude and pays the greatest reward. Now let's ponder. How can we embrace contrarian thinking? It starts with cultivating independent thinking and avoiding the herd mentality. Instead of blindly following the crowd, critically analyze the underlying factors and fundamentals of an investment. Be open to exploring alternative perspectives and question the prevailing consensus. Contrarian thinking requires a deep understanding of the market and the ability to differentiate between short-term market noise and long-term value. It also demands a certain level of courage and conviction to take positions that may be contrary to popular opinion. Remember, as Warren Buffett said, "Be fearful when others are greedy, and greedy when others are fearful." Principle number 4. Focus on cash flow. It emphasizes the importance of evaluating and prioritizing the cash generated by an investment. It involves assessing the ability of an investment to generate consistent and substantial cash flows over time. As Mark Cuban highlights, cash is king. Cash flow is the lifeblood of businesses and the ultimate barometer of success. When investors prioritize cash flow, they shift their attention from short-term market fluctuations to the underlying financial health and stability of an investment. Positive cash flow indicates that the investment is generating more cash than it consumes, providing a solid foundation for future growth and profitability. As Warren Buffett wisely advises, never invest in a business you can't understand or that can't produce adequate cash flow. Now let's delve into a thought-provoking question. Why is focusing on cash flow crucial? Cash flow serves as a vital metric for evaluating the financial viability of an investment. It enables companies to reinvest, expand operations, repay debts, and distribute dividends to shareholders. Additionally, a strong cash flow position provides a buffer during economic downturns or unexpected challenges. Principle number 5. Continuous learning. It entails an ongoing commitment to expanding one's knowledge and staying informed about market trends, industry developments, and investment strategies. It involves actively seeking opportunities to enhance investment skills and adapt to a rapidly evolving financial landscape. As Warren Buffett emphasizes, the most important investment you can make is in yourself. By embracing continuous learning, investors can stay ahead of the curve and make more informed decisions. They can identify emerging trends, technological advancements, and disruptive innovations that may present new investment opportunities. As Warren Buffett wisely stated, investing in yourself is the best thing you can do. Anything that improves your own talents, nobody can tax it or take it away from you. Now let's ponder a compelling question. Why is continuous learning vital in investing? The financial markets are dynamic and ever-changing, influenced by a multitude of factors. By staying informed and educated, investors can navigate these complexities with greater confidence and make more astute investment choices. Remember, in the ever-evolving world of investing, continuous learning is not just advantageous, it is essential. It enables investors to sharpen their skills, refine their strategies, and make informed decisions that align with their financial goals. As Mark Cuban encourages us, learning is a lifetime process. Keep investing in your knowledge, and the returns will compound over time. In conclusion, Mark Cuban's investment principles of investing in what you know, having a long-term focus, embracing contrarian thinking, focusing on cash flow, and continuous learning provide a solid foundation for successful investing. By following these principles, investors can increase their chances of achieving their financial goals. If you enjoyed this video and found the information valuable, we kindly ask you to like and subscribe to our channel. By subscribing, you'll stay connected with our future content on investing, personal finance, and wealth management. Don't forget to press the bell icon to receive notifications so that you never miss any of our upcoming videos. Best of luck on your journey, and may your financial goals be realized.